Welcome everybody out there in YouTube land to the Daily Horizon View for the 9th of the 9th, 2019. We'll be looking at the ASX exchange traded funds and the top 5 in my little categories. Today's spotlight is on ACDC, love the code, that's the ETFs battery tech and lithium ETF. Hang around, that's an interesting one. Maybe a good choice for yourself. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, let's take a closer look at the top 5 ETFs by percentage rises for today. Up there at number 1 is ACDC, which is our spotlight today, so hang around towards the end of our little show here and we'll have a look at that. DIV is the next one there, QFN's in number 3rd place, Triple O's in the 4th place, and IAA is in 5th place. So ACDC is the ETF's battery tech and lithium ETF, and that one tracks a Sol Active battery value chain index. We saw a rise today of 2.6%, which equates to $1.16 on a pretty lowish volume. This is quite a small ETF, volume of 588 shares traded today. Slipping along now to look at the top 5 ETFs by percentage fall. We're looking at here ETPMAG, GDX, MNRS, ETPMPD, and ETPMPM. Looking here overall, dominated by metals, so silver, gold ETFs, gold miners, and also your platinum, palladium ETFs. So ETPMAG is the ETF's physical silver ETF, and that's backed by physical allocated silver, which is held in the HSBC Bank in the US. That one's about $60 million market cap. We saw a fall today of 2.74%, which equates to 71 cents on pretty healthy volume of 36,600 shares traded. So people definitely want to get out of that. Quite possibly because China looks like they're going to be a little bit easier on the US and maybe play ball with the trade negotiations. So top 5 ETFs for dollar rises today. We saw IHVV, ACDC, IAA, IHHY, and IKO. IHVV is the iShares S&P 500 ETF, and that is hedged to the Australian dollar, and that represented by the index composed of large cap US equities, so obviously S&P 500, hedged in Australian dollars. That one has a market cap of roughly $166 million. You'll get a dividend of roughly 2.8%. Morningstar rate this one highly. Morningstar give it a gold rating. You want to think about that in stars, that's 5 out of 5 stars. Today we saw IHVV up by $1.29, which equates to 0.35% on pretty lowish volume of 585 shares traded. Top 5 ETFs by dollar falls. Let's have a look here. ETPMPD, ETPMPM, GDX, IJH, and ETPMAG. So ETPMPD is the ETF's physical palladium ETF, which is backed by the physical palladium, which is allocated and held in HSBC Bank in America. This is quite a small ETF, about $2.3 million for market cap for that one. We saw a fall of $3.50 today. which equates to 1.62% on very, very low volume. Here we're looking at 94 shares in that ETF traded. So, you know, volumes are low, but people are definitely trying to cycle out of that due to the China-America trade, and China looks like they're going to play ball on that. Okay, top 5 number of trades. We're looking at the big boys here now. VAS, VGS, VAP, IOZ, IVV. So VAS is the Vanguard Australia Shares Index ETF, and that one tracks the ASX 300. Market cap here of roughly $3.5 billion. You'll get a pretty healthy dividend here of 4.45%, or roughly. It's fluctuated in the last few weeks anyway. Morningstar give this one a bronze rating, which is effectively 5 out of 5 stars. Number of trades here, we've seen 278. Get my numbers around the right way. Pretty much it just sat flat today, so no change in the share price at all. So top 5 ETFs traded by volume. We're looking at AAA, IOZ, STW, BEAR, and VEU. So AAA is quite a popular one that features quite heavily in both the shows, both the weekly and the Monday and Friday show roundups. So AAA is the Beta Shares Australia High Interest Cash ETF. This one generates returns by putting cash in deposit accounts in Australian banks such as ANZ, CBA, NAB and the like. This one has a market cap of roughly $1.7 billion. You get a dividend yield here of roughly 2%. Morningstar have a neutral rating on this ETF, which is effectively 2 out of 5 stars. This one will pay a dividend, or you get your cash monthly, so it pays a dividend monthly, so that's good if you're looking for something to help generate some monthly income. So AAA, we saw a volume of 197,400 shares traded today, as with VAS, flat, so opened at $50.09 and closed at $50.09. Not much to see there. Top 5 ETFs traded on the ASX today for value. We're looking at AAA, STW, VGS, VEU, and VAS. So, you know, not a great day action-wise for the ASX on the main board, and the ETFs today. It's pretty quiet. Volumes are down. AAA, we saw $9.9 million traded today, so yeah, you know, that's a pretty low day for that ETF. So not a great deal happening on the overall market today. Okay, guys, let's have a closer look at the spotlight here today, which is the ACDC, which is the ETF's battery tech and lithium ETF. Investment objective. So the ETF ACDC aims to provide investors with a return that, before the fees and expenses, tracks the performance of the sole active battery value chain index by holding all of the shares that make up the index closely in proportion with their index weights. So ACDC provides investors with access to companies involved in the battery technology and lithium mining. The index covers all electrochemical storage, not just lithium, in order to capture the whole of the industry. So ACDC is a global portfolio covering multiple regions and sectors, and adopts an equal weight strategy with the shares that it buys. So, you know, part of the whole megatrend type scenario. So why would we look at it? So alternative source of energy generation and the ability to efficiently store that energy is ushering in a new paradigm in energy consumption. Lithium-ion batteries are a key, but far from the only focus of current developments. Like I said, it's part of that whole megatrend, how we generate and store our power. Growth in usage of mobile phones and other personal electronic devices had driven demand for lithium in the recent years. Electric vehicles demand is already high and expected to increase substantially in the coming years. Also, you look at things like grid storage technologies, they're also anticipated to be quite important and growing as we change our energy sources. Okay, let's have a look at the net asset value here. We're looking at 45.66, traded just above that today at 45.86, market cap of $12.8 million. Management costs 0.69%. You also have a cost recovery with this one of 0.13%. So you add those total those up and you get 8.2%, which is quite high. Definitely something to keep an eye on when you're looking at your ETFs is the total cost of actually running these things, like the fees you have to pay. That definitely influences or affects your overall returns greatly. You get a distribution semi-annually, January and July, which is nice. It's pretty low. You're looking at 2.32%. Most of these are international companies, so that's why the dividend's low. So the adoption of electric vehicles is not occurring as rapid as was, some people predicted. So in the first 6 months of 2019, Australian hybrid electric vehicles sales doubled, but they're coming off quite a low base, and they still only make up 3% of the market. I think you'll see the uptake tick up exponentially once you get the charging infrastructure pretty much in place. There's nothing in place at the moment, so that'll jump up. So globally, electric vehicles made up 2.1% of new car sales in 2018. However, I think this will change quite rapidly in the near future, as pretty much what I just mentioned before. Once you get that infrastructure in place, the uptake will be much faster. At its current point in time, the economics of the industry make it a poor investment, I think, in an overall type sense. Like I say, there's still some infrastructure and bottlenecks in the industry that need to be sorted out. There's still a lot of water to run on the bridge before the average investor should seriously look at making investment in an ETF like ACDC. As I said, I think it's still early days. There's going to be some ups and downs for this technology and this megatrend, so it's something that maybe you revisit in 2 to 3 years, and you might have a bit better understanding of where things are traveling and where they're actually going. So there might be other megatrends that are better to look at this point in time. So maybe have a look at some of those tech ETFs. I'd have a look at robots or robo. There are a couple of quite good ones, and I've reviewed both those previously. So if you want to have a look at those, just whiz back and look at the previous videos. Okay, let's have a quick look at the top 10. So Sony, Hitachi, NEC, FMC, Samsung, ABB, TDK, Nidec, never heard of those guys, Sumitomo, and Panasonic. So most of those guys are manufacturers. So FMC, they were lithium miner until they actually spun out, created a new company for their lithium mining assets. So most of those are processors and manufacturers. So total returns here, where are we? 1 year return, it's all pretty negative. Since inception, you're looking at a 5.6% loss. It hasn't been running that long from memory, this one. So like I say, I think it's early days for this type of technology. It's something you should keep an eye on, but quite possibly check back in 12 to sort of 18 months, maybe even 24 months time, and you can get a better understanding where this trend's going and if it's actually going to be a good investment over the long term. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not Financial advice. I'm not trying to promote any particular thing here. It's educational. I'm just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.